Affirm, this is one that Marc LoPresti, the CEO of Market Rebellion, loves this stock. They've had a huge run this year. They're buy now, pay later. But they're down today, and they're down because they're doing a convertible note.
You know, whenever you do something like that, John, it does sort of get people a little bit nervous about, well, why are you needing to do this? What are you doing? You know, this is something that, this is a stock, by the way, if you go back to pre-election, was a $45 stock that ran all the way up to 73, where it was not too long ago. So on this 5% move to the downside, it's a $69 stock. It's right there near that 52-week high. It's been an incredible run. It's had a great year this year. But I think when you look at the huge amount of debt that they've got, the PE, well, there is no E, so there is a problem trying to put together PE. I think you got to know that going in. It doesn't mean that the stock can't go up, because certainly it has. When you look back over the last 6 months or so, that chart looks pretty daggone good from the bottom left to the upper right. That all being said, it still is a company that at some point they've got to show us that they can make earnings, John. They haven't been able to do it yet. I think that if there's a concern out there, that would be the one thing that might hold us back. But if this stock starts to see much more pressure to the downside, not just a 5% move, but a significant move to the downside, I think it's one that you've still got to keep your eye on and say, you know what, at this level, it's a good time. I think right now near that 52-week high, I'm not so sure I want to run after this one.
Well, and I thought, Pete, that the first stopping point would be 66 and change. And I'm not trying to do that with hindsight, folks. I'm just trying to look at the charts and see where support might be. You guys know what support is, the hand under the market, or resistance that's above the market. In this case, it was right at 66 and change. Guess where it got to today, Pete? 66, 67, right there. So
amazing.
Is that the buy? Do you have to buy it there coming off of a $73 high recently? I don't think so, but there's a little bit more support at 63. And if I had my druthers, as in what would I rather? I'd rather buy it at 61. And even though it might not get there, option traders know that you could sell a put if you wanted to. That's not advice. That's what you could do, folks. But if you sold a put at the 66 or 63 or $61 level, you're basically feasting on fear. Somebody thinks it might go there. If it doesn't, you get to keep the whole premium. If it does, you've got a decision to make. Do you want to still own the stock at 61, a stock that on the 52-week looks like 22 to 73? You might not be as anxious to buy at 66 given that. Just kind of breaking it down for them, Pete.
It's the one and only Digo Double.